According to a study out of Stanford and Illumin Capital, investors would rather leave money on the table than invest in a minority-owned fund. Leslie Picker breaks down the results of the study for us. Leslie.
Hey, David, that's right. It's not just a racism issue, but a fiduciary duty one as well. Asset allocators think endowments, sovereign wealth, and pension funds may be missing out on returns by undervaluing high-performing black fund managers and overvaluing those led by white men. That bias was discovered through that study you mentioned by Stanford University and Illumin Capital. Now, the researchers asked the allocators to evaluate managers based on returns, exits, and credentials, and they found that at the highest levels, allocators tended to give black managers lower performance ratings than white managers of similar quality. But then, among the weaker teams, the allocators were actually prone to favoring black managers. But it's unlikely that they'd actually invest in a weaker fund regardless of race. The researchers say that the results of their study suggest that in addition to racial disparities in the pipeline for fund managers, there exists, quote, systemic racial disparities in how investors evaluate funds and allocate money.
When I hear arguments around diversity or excellence, paying attention to manager diversity or performance, that actually flies in the face of that and lets us all know there's something else at play. This is not about performance. This is about something else. And unfortunately, that something else is racism.
There's a long way to go to close the gap here. Currently, of the $69 trillion in hedge funds, mutual funds, real estate, and private equity across the globe, just over 1% is managed by women and people of color.